Happy New Year, everyone. My name is Amy Irvine. I am the CEO and founder of Rooted Planning Group, and I hope that you enjoyed your holiday week. I know we did at Rooted Planning Group, and we're going to dive right into 2023, reviewing 2022. Here is your 2-minute monthly summary. Let's face it, 2022 was not a stellar year at all in the overall stock market. You can see that the year, looking at this chart, that the year ended down 19.4%. That was the year-to-date performance in 2022. Despite the recent bear market, the stock market has rallied significantly over the past 2 years. Now, I'm a big believer that markets remain uncertain due to inflation, the Fed, tech stocks. 2023, I don't think is going to start out very strong, and I think it's going to continue to be a rough early part of the year, as do many economists. But for long-term investors, this is an important opportunity to be getting into the market during these down corrections and looking past that short-term volatility. We like to show this particular chart every month because if you follow this from month to month, you'll notice that, as I just mentioned, this is the total return, by the way, because the return that I just showed you a moment ago showed about a 19.4% decline. This is showing an 18% decline because this takes into consideration any kind of dividends that were paid. So when you couple the dividends with the actual price adjustment, the S&P 500 closed down about 18% this year. At its lowest point, it was 24%. So if you got in at the very bottom when it was down about 24%, you actually gained 6%. Now, we never know when the bottom is, of course, but I think it's important to follow that and stay in tune with the fact that these are buying opportunities. If you haven't seen these videos before, the blue bars are something that actually show you the total return for the year, where the red dots are showing you the intra-year lows. And when we look at market corrections, just a quick reminder that this is S&P 500 market corrections and recoveries since World War II. This chart shows 24 stock market corrections since World War II. The average correction sees the market fall about 14.3%. And from peak to trough, it takes about 5 months, where recoveries occur within, on average, 4 months. Now, we're outside those ranges, and this is beyond just a typical recovery correction cycle. But I wanted to point this out because I think it's important for everybody to see this. Although we're going a little long on the 2 minutes, I still want to point out the fact that, as you'll notice, we are still in an inverse yield curve, meaning that the shorter term rates are still much higher than the longer term rates. This is a prediction of a recession that may loom, and I think we've all been feeling the fact that that's very likely going to happen. Let's just hope it's a gentle one. Wrapping up with the final 2 slides, we just wanted to point out that it's interesting to see that the non-manufacturing and the manufacturing are telling us 2 different stories when it comes to economic activity indices. You'll notice that non-manufacturing activities are up 56.5, which anything over 50 suggests expansion, while numbers below 50 suggest contraction, which is what manufacturing numbers are doing. So it'll be interesting to see the December numbers that will come out in January. And finally, we always like to end with this presentation on asset class performance when we talk about diversification. This goes to show what diversification does for most people in the performance of their portfolio. If they were all in one asset class, they might do really well or they might do very poorly, but on average, it's the balanced side of the portfolio that tends to do exactly what it's supposed to do. It flushes out the negative side of performance and adds a little bit to the positive side of the performance. We hope you've enjoyed this presentation. I know it went a little bit longer than the 2 minutes, but we wanted to bring you up to speed as of the end of the year. Happy New Year!